Hello, everybody. Hello to our session today. Get together, longer term, 13th of February. Before we start, could you please go ahead and click on the, well, more than click, type on the comments box a quick hello, a quick yes, just to confirm that you hear my voice. So apart from getting the screen, you also get the voice, and that way we can start. I need this little confirmation to make sure that technology is on our side. So please go ahead and let me know. Hello, everybody. Yep. So, yep, it seems that everybody's connected. So that's perfect. Very, very good. Very, very good. Perfect. Okay. Well, so let's begin our day. Good to see you, everybody. Today, we're gonna talk about longer term, isn't it? Today it's a GTP session for longer term. So we're gonna be using our UFOs combined with options most of the times. If we have time, I would also like to look at the currency markets for longer term, because something that sometimes investors forget is that they are making money with certain products in which they are invested, but because it's longer term, well, there is also time for the currencies that are being used in those investments to change value, and sometimes this could be problematic. Okay, so we'll make it a second priority today, if that's okay. We'll just do it only if we have time. I would like to focus on options more, but that would be the goal, to look a little bit about the options, but also look at the currencies, okay? Anyway, before we start, as always, a quick disclaimer for today's session, 13th of February, 2019. I didn't say my name is Jose Blasco, so here we go, disclaimer. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provide these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okay? So again, this is the formal beginning part of the session. Today we are doing get together again one more time, longer term, okay? Longer term, which doesn't mean necessarily very long term, but anything that is beyond intraday, okay? Any trade that we may have running, which is a little more, which is a trade that lasts a little more than what an intraday trade would be, which is during the day, we'll call it longer term, okay? And could be a trade for a few days, a trade for a few weeks, a trade for a few months. We'll be looking at all those different types of opportunities, okay? So thanks for the hellos and the messages on the comments box. As you know, I would like to ask you all to be interactive during the session, because that's going to make the session much more useful. You also probably remember from prior sessions, if you have been with us, that when you type on the comments box, you have to leave the full screen mode if you're using IZON, so you can type and then you go back to the full screen mode. And also when you type, whatever you type, remember, I see that, but you don't, okay? Now, the moment anything that you type is relevant to the session, or it would be useful for me to share with a group of traders that we are connected together in our get-together session today, then I would just make that text pop on the main screen, okay? So that way we have no wasted space on the screen. We focus on the charts and the UFOs and everything that we need to do in here, okay? Here are the UFOs, 1, 2, 3, magic, okay? Anyway, so before we begin, quick comment. Our webpage, tradewithufos.com. I believe that everybody, most of you, should be familiar of this page. that is how you ended up getting together with us today, isn't it? Because you probably accessed, clicking the Get Together button, you accessed this calendar. As you can see, the calendar has been updated until the end of March. And if you scroll down all the way to the bottom, this is where you register so you can join. And this is how you end up receiving the emails that we send you with the links that are needed for you to connect with us, either via YouTube, Facebook, or the preferred way, it's eyes on, if you wish, okay? So now, the reason why I'm pointing at this is because you know, if you have been looking at this list, that we have 3 types of sessions that we do. We have the sharpening sessions, where those days we do it over the weekend. That's going to be Sunday, February 24. We take advantage of the fact that the market is closed, so we can go ahead and talk about things with no rush and talk about, let's call it the theory, on how to use the AutoUFOs and trading in general, etc., etc. Second, short-term type of sessions, which those are the ones that we conduct when the market is open and we execute trades together. Hey, Mario, how are you? Good to see you live here. And then also finally, we have the longer term sessions, okay, which those are sessions like today, where we also do them live during market hours, because the purpose is that you execute, okay? But to be able to do short term and long term, really, what we also need is that you have certain level of knowledge or skill built in, so you can actually execute. So what we do is that we get together in the sharpening sessions, okay, to build up that skill. So then with short term and longer term, we can actually apply it, okay? And at the same time, nothing is black or white, because many times when I do longer term, short term, we will be adding a lot of information, a lot of details, which are explanatory, which somehow is also sharpening, but we are kind of sharpening while trading, okay? So it's kind of a mix, okay? So anyway, keep this in mind. This is critical, this is important, and make sure that we are all well connected, okay? Talking about being well connected, we have a Facebook page and also a LinkedIn page, okay? The LinkedIn page is right here. I'm just gonna put it on the main screen for everybody so you can see it, okay? The Facebook page, it's right here. So I'm just gonna get it right here as well on the main screen so everybody can see it. The reason why I'm pointing at the Facebook page and the LinkedIn page is because I would like to ask you all to like it or follow it, okay, or both. Why? Because that way we are better connected, okay? We sometimes, if we have a change of date, or very, very important trade examples. Our users are posting trade examples all the time. We have a fantastic trade from Chuck Phillips with options, trading options intraday. Okay, today we'll talk about options longer term, but this is options intraday, and using the UFOs together with the advantage of time decay with the options, nice profit. Okay, well, sometimes actually we'll post losses too, because trading is it's actually both, not only profits, also the losses, okay? But all those examples we posted on our social media pages, and it's critical that you follow, because some of you are very advanced and maybe you need it less, but some of you, which you may be still in the process of defining how you want your trading to be. Well, one way to really accelerate taking certain decisions on how you want your trading to be is to really look at examples from other traders, and there are many, okay, in our social media pages, because we post them every day. So that could be a great source of another way to do sharpening, okay? It's actually to look at trade examples from our users, okay? And on top of that, it can help you to go to the next level, okay? And also our YouTube channel, I know some of you already know all of this, okay, but I do need to explain it because not everybody knows it, and some of you watch this recorded. So quick explanation here. Our YouTube channel, okay, please go ahead and subscribe, and please go ahead and click on the little bell, so that way you get notifications as well. So as we post new examples, now the other day here, in the user trade examples, we have a playlist, right? The other day we posted a new trade example from a fantastic trader, made like $4,000 trading crude oil. The example is there. You can actually get to see the trade. It's just one trade and the example is there. If you are subscribed and you click on the bell, you receive the notification so you can go and see. And then of course we have the playlist for all the get together sessions that we do. So if you have missed any in the past, okay, for example, the one we did on Sunday, February 10, talking about options part 2, because the one we did on January 27, we talked about options part 1, well, all those recordings are there. So if you are joining us since not so long ago, it would be very healthy that you go back in time to kind of review and catch up with what we are doing. Okay. Again, some of you already know all of this, so that's why I'm talking about it very quickly. And finally, very important question we receive all the time: how to subscribe to the app? Well, you need TrustStation, okay, to subscribe to the app. So you first need TrustStation, and if you already have TrustStation, it's very simple. You click on the button "Try for free now," and this will open a new page that is loading as we speak, where here you go, magic, you click subscribe, and automatically you log out of your TrustStation account, you log back in, and magic, the app is inside your TrustStation. Okay, you have your AutoUFOs running. What if you don't have TrustStation? Well, then keep scrolling down, and now you have two options. Okay, you can click here to sign up for a TrustStation full execution version. Okay, or if you don't want an account with TrustStation, you can just go with TrustStation Analytics, okay? But that would have a cost of $250 a month, which is much higher than using a full execution version of TrustStation, where you have no software fees, and the market data is free for most markets, okay? Good to see you, Chuck. I was actually talking about one of your trades one second ago, okay? So good timing. Anyway, so everybody, we got organized here in the beginning part of today, and therefore let's begin. Okay, and one last comment before we begin. Last Sunday we did options 2. 2 Sundays ago we did options 1, and that is great because that allows me today that we are doing longer term sessions. This allows me to be a little more. Let's call it sharp, okay, a little sharper when it comes to planning the trades and doing a few more things, because the more time we spend sharpening together, the more we speak the same language. And the more we speak the same language, the faster we can go looking for market opportunities, execution, etc., etc. Okay, so let's attempt 3 goals today. I'm not sure if we'll have time in 45 minutes, but that's my intention. The 3 goals I would like to accomplish today is: number 1, plan some non-directional trade. Goal number 2, plan some directional trade with options. And goal number 3, look at the Forex market. Okay, I would like to do those 3 things together, which, you know, I'm a little perfectionist as a person, which is good and bad. And we may get there or we may not be able to get there, because I also want to be respectful of your time. Okay, but at least this is my goal. And if we don't accomplish this goal today, we will as we spend time together, because again, especially with the sharpening sessions, and we'll have another session. The next sharpening sessions will take place. Let me fast forward to get together. The next sharpening sessions will take place. Let me give you the specific date. That's gonna be on February 24. Okay, so February 24, that will be the next one. And notice that how we added so many sharpening sessions into March, and even beyond April, probably even more. Okay, so let's be connected. Okay, so here we go. Let's begin with non-directional trading. I'm gonna have my briefing.com right here, because we're gonna have to consult briefing.com. We have a few non-directional trades running, isn't it? So we have SQ. Okay, SQ is a non-directional trade that we planned the other day. If you are in the trade with SQ, I would love to know, guys, if you guys are out there and you would like to just say, yes, I am in. Remember that only me see that, so feel free to comment. But it would really be important for me to understand if you're in the trade or not. So SQ is a trade where, let me maximize the chart, where in this trade, we were looking at an entry on that day, the day with the first vertical line. And because of the UFOs, okay, if I was to activate the UFOs, we have UFOs above and below, and we were expecting this market to remain between UFOs, and you can see the reaction from the UFOs, and the market is staying there. Of course, all of this is creating time, and time passing produces the effect of options time decay, and therefore, if you are in this trade right now, you are in a profitable position. Okay. Of course, this can still move away from you, but remember the expiration date that we're using is February 15. Today is 13. So as long as you survive the length of this trade 3 more days, Wednesday, Thursday, and Friday, you get a full profit. If you were to get stopped out today or tomorrow or something, I would say that probably you will still end up with a profit because we have accumulated time enough already at this point. Okay, so we have the trade with SQ. That one is working well. We have the trade, what was it, with Home Depot. Same story. This is non-directional trading. We are about to reach the expiration date here as well. Okay, so we entered the trade at that time. Expiration date was 15. We are about to get to this vertical line here, which is the expiration date. So we are almost there, and this trade is also working well. So if you are in the trade, I would love it if you let me know. And finally, we have another one. That one I have a less good news for you guys. That was a trade with CRM. We were exploiting the same concept. Okay, I have to say this trade was a little more aggressive because the distance between 161 to 150 was a narrower distance. Okay, and this trade, as you can see, we got stopped out. I believe it was 2 days ago on the 11th. Okay, well, actually that was 2 days ago. Counting on today, like if the market has opened already, which it hasn't yet. Okay, but anyway, so again, this trade had accumulated time decay, etc. So if you got stopped out, and yes, Mark, I can see your comment here. I was looking at the chat box to see who is on the trade, and because in this case, obviously, it's a little bit less of a good news. Okay, even though this is part of trading, so we need to talk about it as well. So if you got stopped out, okay, as Mark is commenting, well, I'm still gonna say good job taking the trade and executing the plan religiously and having your stops, etc. But I do want to ask you a question, Mark, which is, you know, if the loss you collected had been diminished by the time decay, or did you lose more than expected or less than expected? That's basically my question. It would be great if you could comment. And the second comment I want to also mention is that as we spend time sharpening cases like this particular case with CRM, where we were actually wrong on the trade, and our non-directional trade, we actually became directional, and this thing moved as we were expecting it to be limited in movement. Well, the second comment I wanted to make about it is that we'll get to a point in our sharpening sessions where we will talk about how to offset this problem by entering certain trades that I'm not going to say are going to cure the problem 100%, but in many cases, they would end up converting what could be a small loss into a small winner. Okay. There are many people out there that talk about options or trade options, and they talk about repairing trades. You know, in my mind, maybe because my brain works in Spanish, and Spanish people, we are very direct without the words we use. So repairing the trades to me feels too strong as a word. You know, if you're wrong, you're wrong. If you're right, you're right. But there are certain things you can do with options. Options give you options, and there are certain things that we'll be able to do to kind of cure or heal you know, a little bit the trade, you know, do some stuff. Okay. And again, I'm not sure what was the ideal word to use. I am open for suggestions, but we will talk about all of these as we get more advanced with options. Okay. For now, we are putting material and practice all together. Okay. And you guys are executing those trades. And of course, you guys, we're all professionals in the room and adults, and therefore you decide if you want to execute those trades with paper money or real money, big size or small size. Those will be your decisions. Okay, but I'll be leading you. Okay, and hopefully that will help you to grow yourself as a trader and also grow your accounts. Okay, good. So Chuck Phillips has a question here. So let me get this on the screen as well. Chuck Phillips, I am curious to know why a UFO will show at a 4-hour time frame, but not at a 1-hour time. I am looking at the Euro USD right now. Okay, so Chuck, if that's okay, I'll take your question towards the end, because towards the end, I'm planning to look at the currencies, and if that's okay, that would be the ideal time for me to check, okay? Good. Thanks for that. And then I have a question or a comment here from Mario. Let me get this on the stream. My pleasure, Jose. I don't know if this question is out of scope. I was considering to set up a bear put spread on Microsoft. Volatility not too low, so it's a bear put spread. Okay. Daily UFO 19. Yes, very good. So, Mario, great question as well. Since I plan to start the day with non-directional trading, which is going to be credit spreads, and a bear put spread is a debit strategy, is a debit spread. So, if that's okay, Mario, what I'll do is I'll take care of the non-directional first, then I'll look at the directional, and I'll start with your example, and then I'll look at Forex, and I'll start with Chuck example. Okay, so that way I follow a sequence, and for the people that are not so used to options, okay, I don't drive you crazy. Okay. Cool. But I love what you're doing, okay? And this is what I would love to see every single time, okay? So, thumbs up there. The best way that we can collaborate is that not only, I am giving you information, planning trades for you guys, supporting you on how to use the AutoUFOs, but if we were to make it bi-directional in a way where every time we are getting together, you guys come up with your questions, we can certainly do that, okay? And I'm also happy I'm keeping these sessions short for an hour because, that way it's, I believe it's more efficient, but if we need more time, I'm happy to add more time to this as well. Okay, so we'll make this work. Wonderful, guys. So let's begin, guys. So again, what are we doing here? Non-directional. Okay, and when looking at non-directional trades, what do we want? Well, we want to find abnormalities. We want to find options that are very highly priced in exchange for no risk. That's what we want. And what? How do we find that? Okay, well, I'm using a scanner. Okay, I'll show you the scanner here very quickly. So the scanner I'm using is looking for the 25 stocks that have an ADX of less than 25, meaning that those stocks are not trending. Stocks with a volatility which is the top 25. Okay, so very high level of premium built in those options, very overpriced options, while the stocks are not really moving. So that could be the beginning of finding an abnormality, the way I was saying, meaning a little bit of an arbitrage opportunity in the market. Okay, now sometimes those abnormalities that look abnormal, they are not, because what happens is that the stocks start trading sideways and quiet because people are waiting for the earnings report, and therefore the options are gaining value where the stock is slowing down. And that would not be an abnormality. That actually would be the normal thing to expect. So that would not be an advantage. Okay, so what I'm going to do is, now that I loaded my list of stocks with the scanner, I'm going to quickly look at the stocks with the greatest liquidity, like Baidu, and look at if there is any earnings report coming soon, February 21st. Okay, well, February 21st, that is next Thursday. Okay, so next Thursday is not good, because if I'm going to use an expiration date, okay, I will not be able to use it properly unless I do something very, very short term. Let me load OptionStation Pro as well. Unless I do something very, very, very short term, and in that short term. Okay, just 1 second. OptionStation Pro is loading, and in that short-term approach to trading, I can find a trade to keep during the intraday, or maybe a couple of days from now to Friday or something like that, and get out them. Okay, so I'm going to look at Baidu. I'm loading Baidu here, and while I'm loading Baidu, I am going to be also looking at Baidu here in a 60-minute time frame. Well, a 60-minute time frame would be too large for this application, so I'm going to drop it to something like 15. Okay, because now we are planning to collect a trade and stay in this trade for a couple of days. Well, if you look at this, and I want to expect Baidu to remain trading sideways for some time, of course I need to have UFOs above and UFOs below, and certainly I got 4 red UFOs above price. Even though, careful, this market is going to open 1.26% higher. That's 172.40. So 172.40 is somewhere here. Okay, so basically this market is going to gap inside the UFO right at the open. Okay, and there are many unfilled orders here. Okay, and So it may drop from there, but I would like a little more, a little better confirmation. So, the one above could be a better choice. Now, if I was to use the one above, my options that I would sell would need to be 176.54. And if I look at Baidu, okay, if I look at Baidu, and again, right at the open, the option chain will be 0, so I will not be able to see that. I'm going to have to wait 6 minutes for the market open, but we'll look at this in 6 minutes. But basically, what I look is, do I have options with enough premium at this price, yes or no? Which is $6 away for a $170 stock. I think it's going to be tight to get premium enough to do some non-directional play on Baidu. Okay, so I'll keep going with the list of stocks and briefing.com. So I'm looking now at CRM, which is a stock which also has pretty okay level of liquidity. The earnings reports here is March 4. Okay, so March 4th is good because if you look at the option chain, we can be using March 1. Okay, we can be using February 22 or March 1. So CRM is a stock I will keep in the radar to look for potential non-directional trades. So I got Baidu, I got CRM. CVS is not an amazing liquidity, but it's not bad necessarily. So we look at February 20 is too close. What else do we have here? Home Depot. Home Depot certainly has okay liquidity. And it's February 26, so we may have a play with Home Depot as well, because February 26 is after 22, so maybe we can use weekly expiration dates with Home Depot. Okay, so I'll check that in just a second as the market opens and the option chain updates. What else do we have here? NVIDIA could be a good play as well. NVDA. So what do we have? February 14. So that doesn't work because that's tomorrow. I would say that would be it, okay? So as the market opens in 4 minutes from now, what I'm going to do, okay? What I'm going to do, I'm just going to write it here so we don't forget. So I'm using my radar screen to write it down. So what I'm going to do, okay, I'm going to look at NVIDIA. I'm going to look at CRM, and I'm going to look at Baidu. Okay, those are the 3 stocks. What did I say? Now, right now, I just got confused myself. Sorry for that. Home Depot. Did I say Home Depot too? Yes, Home Depot as well. Yes. Good. So we look at those 4 stocks. Okay. Look at if we can find a setup for non-directional trading, and we'll go for it. Okay. And while we'll be looking for those stocks for non-directional trading, I would like to reformat my scan to also look at directional opportunities. Okay. And this is the first time that we're doing this. When we do get together, and the reason why is because now we are ready to do it, because last Sunday we did options 2, and when we did options 2, I did give an example of using calls for directional purposes. Okay, I didn't explain for the puts yet, but we did the call side. Okay, so I would like to begin the session looking at market opportunities. Okay, I would like the scanner to find market opportunities for me, and I'm going to wait 2 minutes to run it when the market opens, so I have fresh market data. For non-directional trading, you don't need to, because it's non-directional, but for directional, obviously, it depends. If the stock opens gapping down, gapping up, it may gap down inside of a UFO. So it would be very relevant to look at it, right? So what I'm going to do is I'm going to have to reformat. So first of all, for directional trading, we don't care about the DMI. So the DMI is the non-directional indicator, if you wish, or if you want to have it activated, it's okay, but then you have to invert the less or equal 25 to greater or equal 25. So now we're going to look at stocks that are in a trending mode. We also want because we're going to buy options. We don't want the top 25. We want the bottom 25. This is going to look for underpriced options in the market, options that are quite affordable to purchase. We do want the good liquidity with the open interest. And then the moving averages that are unchecked, I'm going to recheck them now. I'm going to expand. And notice how here what we're saying is that we have the 21 daily average, okay, the 21 daily average, okay, above the 34 daily average. In other words, it's an uptrend. So not only we said we want it to be more than 25, which means the stock is trending with certain level of momentum. On top of that, the trend is up. It's not a downtrend, it's an uptrend. Okay, so this is the filter I'm about to run. We are looking at the liquidity of the stock as well, and we want stocks with a price of minimum $50 a share. Okay, and the market is going to open. That's it. The market just opened. So I'm going to click run, and we're going to have this filter execute right here. So we'll have the result in a minute, and we'll be able to use that to plan the trade. Okay, good. In the meantime, while the scanner is executing here on the left side of my screen, when looking at the option chain, well, now if I look at Baidu, if I look at the 177.5, we can see that there is a little bit of premium there, but I'm not too keen with the premium. Plus, the spread is quite wide, which very often this happens because it's the opening time of the day. And also it's a 0.5 strike instead of a round number strike. So that normally suffers a little bit of liquidity, but basically the spread is half the price of the option, which is too much spread. Okay, so not interested in Baidu at the moment, because remember, Baidu was the stock that we discussed a minute ago, okay, where the earnings report were happening quite quickly, February 21st. So if we were to do something, it would have to do something very, very short term. Okay, good. So for now, I will leave Baidu alone, and I will come back to revisit Baidu because 5 minutes from now or so, normally you would see the spreads in the option chain to normalize a little bit. Notice how now it's not 30-60 anymore. Now it's 40-50. So this is normalizing because as the trading comes in, liquidity spikes up, and as liquidity spikes up, the option becomes more friendly to be traded. Okay, but anyway, I'll come back to Baidu later. We'll leave the scanner running, and let's go observe if we got anything with NVIDIA, anything that could be a market opportunity with options. Oh, actually, okay, so I got confused with NVIDIA, guys. That was Home Depot. That's when I got confused earlier. Good. So Home Depot. Let's begin with Home Depot. Home Depot, I believe, earnings were March. Okay. They were not March. It was February 26th. Good. So good that I reviewed. So that means that with Home Depot, which Home Depot should be loading. Let me refresh the Option Station Pro. So Home Depot, okay. So it's coming. Yeah, TradeStation is doing many things right now at the same time. So, the scanning process normally is quite demanding, especially when you get into calculating easy language. Those 3 last steps are the most demanding for the software. So we're going to have to be kind with TradeStation and allow TradeStation a little bit of his time to do what TradeStation has to do. Okay, so I'm not sure. Okay, give me a second. My Option Station Pro is not loading properly. again, when the market opens, the Option Station Pro as well is a tool that is quite intense for TradeStation, and since I'm running it together with the scanner, so I guess TradeStation is struggling a little bit. The option chain has a lot of data built in, data that is mathematically calculated every time by TradeStation, like the options Greeks, etc., and all of this is quite demanding. Okay, so I am loading now Home Depot in Option Station Pro. I'm bringing it to the screen as we speak. Okay, and here are the dates available: February 15, 22nd, and the earnings report is on the 26th, as you can see on the right. Therefore, February 22nd should be the date that we use if we were to plan another trade with Home Depot. Okay, so I have a trade with Home Depot, as you can see on this account. -2 + 2 means that I have a position in it as we speak, but we're gonna reobserve, reanalyze this market, looking for a market opportunity, so you guys can also execute this trade. Okay, so TradeStation is progressing here with the scanner, so we'll just leave it a little extra time. Should be ready soon. So changing the time frame for Home Depot to 60 minutes. Okay. Good. So when looking at the 60-minute time frame, if I move down, we can see that we have UFOs right there. Okay. We have collections of UFOs. Okay, right there. But again, I want to be a little more advanced as we go with the UFOs. Because number one, you can see the probability of the UFOs working well here is 4961. Okay, we have this probability here. The scanner just concluded, and we have 6 stocks that could be potentials for directional trades. So we got 4961% is the probability. But I also like to, and you have seen me do that before, to look at US stock with pre and post market. And in this case, it's giving you a better probability. Okay, it's giving you a better probability. Okay, so we'll have, sometimes we will not use pre and post market. Sometimes we will. It depends. Whichever institutions trade those stocks, it's looking like in certain stocks. I'm using the calibration, Chris. I'm using the standard parameter because everybody may be using a different one, and I cannot use too many. So I just go with the standard 0.5. Certainly, we could use a little bit of a higher number, and normally would give a better result. Okay, so I'm going for the pessimistic one, if you wish. You can certainly vary your calibration and come up with a better trade than me, but at the same time, I try to be kind of as compatible with all of you as possible. So I'm going with the 0.5. Okay. So what I was saying is that there are stocks where you will see the unfilled orders being removed. I'm talking about the unfilled orders placed in the market during pre and post market hours, where other stocks, for whatever reason, the institutions that trade them, when they place unfilled orders during pre and post market hours, they actually keep them. And how do you know that? Well, you know that thanks to the stats. If sometimes you have seen that we switch to pre and post market, and the blue number, which right now is 4961, drops to 35 or something like that. Well, if that's the case, it means that you should not be using pre-market and post-market for that stock, because the institutions are pulling their orders out. They are canceling those orders. So you had unfilled orders, but they were canceled. That's not going to help. That's not going to help you. Does that make sense? So we always go for the highest number as possible, but also we definitely need to respect the regular market hours, because this is what everybody looks at when trading. But at the same time, you also want to look at pre-market and post-market only if the number is bigger. Okay. Also, normally you have seen me use the 60-minute time frame to assess those trades. Today, I will drop all the way to the 5 as well. Okay. So you will see how I'm going to do this. Okay. So first of all, what do we have? Well, we have 2 UFOs on top of each other at this price point. So before I spend more time in this analysis, how much I get paid if I sell the 195? Do I get paid anything decent? No, it's not enough. 19 cents is not enough. So you know what? That's it. No trade with Home Depot for non-directional trading. That was easy. Okay, not the best answer, maybe not so satisfactory, but it was an easy one. So let's switch to CRM. Okay, and let's begin with the UFOs to see what we have. Okay, so it seems that this market started trending to the upside quite efficiently. Okay, we saw a stop out on the trade that I showed before with CRM, which means that this market has started going from non-directional to directional. Our scanning process still picked CRM as non-directional, but the fact that we don't see UFOs is concerning. Okay, it's concerning because it means this thing is now removing all the UFOs that were out there and is now trending in a strong uptrend where there is nothing out there. So what am I going to do? Well, switch to the daily. And when I switch to the daily, look at what we see now. We have this thing making all times high. In other words, we don't have on-field orders to rely on to expect this market to remain sideways. So I cannot be non-directional with CRM because of the market condition, and I know that thanks to the UFOs. So unfortunately, I do not have a valid trade with CRM with a non-directional approach. So what about Baidu? Let's go revisit Baidu because again, earlier we said that it seemed that those options were normalizing a little bit. So 177.5. Notice how the spread now it's let's call it a nice spread. Okay, let's call it a nice spread. So what do we have? Well, Baidu open. Moving up. Okay, I would like to look at lower time frames. Okay, because we are going to be using an expiration day, which is Friday. Friday is 2 days from now. That's what the 2D means. Okay, and therefore we cannot use UFOs that are too far, because if the UFOs are too far, you would get no premium. So when you look at the option chain, if I look at a UFO that is too far, for example 200, well, I get paid nothing. I get paid zero. Why? Because it's too far. Why? Because based on probabilities, there's no way CRM Baidu reaches that level in such a little amount of time, which is 2 days. So we need to find a little bit of a balance, and in order to find balance and still have tools to defend ourselves from having the price move up, in other words, we need UFOs, we need red UFOs, right? And to have them closer, I'm going to have to use the 15-minute time frame. Okay, so when I look at the 15-minute time frame of Baidu, as we said before, we have this UFO here at 176.5. Now, it would be great to have the 176.5, but it does not exist. Okay, we only have the 177.5. So, can I create a 176.5? No, I cannot. Maybe I can sell the 175 and the 177. If I do both, if I sell both together, it's kind of like I'm averaging. It's like I'm averaging 175 plus 177.5 divided by 2 is like I came up with the 176.5. Okay, kind of. So this will use more options, but it may do what I need. So now, what if I do that? Well, if I do that, that means that I'm expecting that during 2 days, Baidu will not surpass that high. What? So if I project the same high, okay, to the downside, okay, if I project it from the current price to the downside, this puts me around here. Okay, now what's the problem? The problem is that around there, which is the ideal place for me to sell options so they can be equal distance if I want to do a classical book type of non-directional trade. The problem is that I have no UFOs. Okay, so what I'm going to do? Well, first of all, keep this number in mind, 46.45, and now I'm going to move to pre and post market and see what's the number. It's 41, so I'm going to ignore pre and post market with Baidu. You see what I told you before? It's looking like the on-field orders. Okay, the on-field orders that are placed pre and post market with Baidu are then taken out if they're not filled. So pre and post market is not helping you. So what if I drop to the 5? What if I drop to the 5-minute time frame? I have something to defend myself here. Okay. And if I look above, what do I have? The same thing. And I got a few of those UFOs on top of price. So would it be a crazy trade to go ahead and doing a non-directional trade? We're gonna make it an Iron Condor with Baidu and rely on the 176 and the 167 something. Well, it doesn't look like it's a crazy thing. The only thing I need is premium enough with the 167. I got the 167.5, that's 46, okay? So it's not an amazing level of premium, but I mean, if I'm gonna do the 175.5 and the 175 and the 177.5, I'm gonna get 130 divided by 2, right? Is like, let's call it 65. If I do the 167, I get like 40, but I do 2 of them, that is like 80. So it's kind of the same. It's kind of the same because in this trade, I'm doing an Iron Condor, which is a little more advanced than things that we have done before, where I'm gonna be selling 2. So I'm gonna be selling the 177.5 call. Okay, so the minus sign stands for sell, and we're gonna be selling the 175 call too. Okay, and to protect all of this, we're gonna be buying 2 of, let's call it the 180 call. Okay, and I'll check that later. But this is kind of the plan. Now, again, this is quite advanced. I know for some of you this is absolutely fine, but I also know that for some of you this is quite advanced. Okay, it depends if you have traded options before or not. Okay, so it's okay, bear with me. Then we're gonna sell 2 of the 167.5. In this case, you're gonna be puts, so P for put, and then as a protection, we're gonna be buying 2 of the 165 put, which is the one below. So I'm curious to see what happens if I do this. Okay, if I do this, do I have a trade that sustains the risk versus reward analysis? Okay, so I am analyzing to sell an Iron Condor, adding 3 strikes. So I'm going to use blue above and blue below. Blue is obviously my blue lines. The blue line above is 176.54. The blue line below is 167.78. And the one in the middle is going to be the last price, which is the current price. Now I'm going to have to go with 2 for everything. Okay, but to be honest, this is not exactly how I'm going to have to do it. I'm going to have to come up with an Iron Condor, which is actually a custom strategy, where I'm going to have to add an extra call to be sold. Okay, so I have an extra call to be sold, which I'm going to put here in my simulation. Okay, so what do I have? Look, I'm going to put the calls above and the puts below, just like it's on the chart, so you guys don't get confused. This is going to be 2 and 2, and this is going to be 1 and 1 and 2. Okay, the calls that we bought, remember, looking at the chart, we are buying the 180 and it's 2, and then we are selling 177.5 and 175. So 177.5 and 175. So I got the call side well set up, and then on the put side I got my 167.5 and the 165. So 165 and 167.5. Good. So if I do that, what do I have here? What do we end up with? Well, we end up with something that is not too well balanced. Okay, and we're gonna have to play with it as you can see. If you think about it, notice how the P&L above, if we reach the upper blue line, is negative $130, where the P&L below is negative 28. Okay, what does that mean? That we lose much more above than below. Okay, and the difference is way too big. So I'm gonna fix this problem moving down from 167.5 to 162.5. Okay, the moment I do that, I got a risk above of 119 and a risk below of 114. Okay, that's my risk. This is quite balanced now. And if I was to do this condor now, as we speak, you would get $188. Again, for the person that never traded before options, you gotta take it easy because we're using 2 units at a time. So it's a higher risk condor compared to other condors that we have done. So you also need to know how to implement or enter stops in the platform, because I haven't explained yet how to deal with condors. If you wanted to deal with condors with no stops and use another style of contingency type of process. Also, notice that if the market goes up, you will make a profit, but notice that there is a moment in time where the profit drops a little bit, okay, because of the 175 call that hurts a little bit, okay? So we are not fully guaranteed the $195 of profit if the market goes up a little bit, okay? But, we're kind of making up for the problem that there is no 176.5 strike, which is the one we need. Okay, we have the 175, the 177.5. We don't have the 176.5, and therefore this could be one way to offset the problem. And the good news is that this is picking up $61 of theta per day at the current price, 30 above, 41 below. So this is decaying pretty fast, and remember, tomorrow even faster, and Friday even faster. Okay, so notice how based on the shaded area on the screen, which again, we'll need to talk about this properly in the future, but it seems quite unlikely to be stopped out below. It seems more likely out above. But again, we got a collection of UFOs in the 5-minute time frame and the 15, which may slow down Baidu from going higher. Okay, even though right now it's pushing quite hard, well, it may not be the case thanks to those UFOs that we find in the 5-minute time frame where price is now entering those. So one of those should be bringing Baidu down, okay? And if that's not the case, then this would be a trade which is not successful, okay? But again, here we are heavily leaning against a very, very fast time decay, because this is a 2 days and a half trade at this moment in time. Okay, so out of an experience, we're gonna launch it. It's not my favorite way to start as an iron condor, because we are very close to the upper part and quite far to the bottom part. Okay, so it's not my favorite way to start an iron condor, in the sense that we are accepting a higher probability of being stopped out above than being stopped out below. Okay, and that's why the shaded gray is more on the right and less on the left. So we'll need to work on those non-directional trades more in a more advanced manner, more intelligently in future sessions, especially when we do sharpening. To get to a point where I will be adding multiple more rules to make those condors better. Okay, so I would not be suggesting at this point that you execute this trade, or if you're going to be executing it with money, use a small size. That would be my suggestion, or even paper money, because of this reason. But from an experience and practice point of view, I would certainly suggest everybody to place this in a simulated account and run it, so you get to see how it's going to work, because this is a pretty interesting type of condor where we created a variation here on the top with those two options with a different strike. Okay, so it's quite a little bit of a hybrid type of condor, etc., etc. A very short-term expiration date, so worth it to execute. Okay, notice how the price of the condor dropped already from 199 to 187. So time is passing, and the time decay is hitting this condor, and we can see it as we talk. So I'm gonna put it in the account. Well, I'm having a little. Why is it not allowing me? Okay, so I'll do it after the session is over. I'll execute this condor. Maybe I need to do it manually. Is this the reason? Yeah, I'm not sure. I'll need to check why it's not allowing me to execute. This is, I mean, it's a custom order, but this is way beyond custom. Probably TrueStation doesn't know how to execute 5 legs in one shot with different size. So I will probably need to, break it down and do multiple executions. Okay, so I'll do that later, if any. If you want to do it for yourself, again, just do it yourself. And the purpose here is that you practice so you can learn from this experience. I'm going to keep a screenshot of the chart so we can comment, but again, not too comfortable by the fact that we are too close to the upper side of the condor. And that reduces the probability, especially because this is not an intraday trade. You need to survive two overnights, okay? So we'll just leave it here just to review and learn from it. Anyway, so now that we are ready with our non-directional analysis, which today produced a trade for practice purposes, but not a trade with the highest probability. So that's what it is. Okay, we cannot change the market conditions. We can adapt to them, but not change them. So what we're going to do is I'm going to look for the directional opportunities. Okay, I want to look for the directional opportunities, and then I'll jump into Mario's question, and then into Chuck's question, and we'll go for it. Okay. So Expedia. What happens with Expedia? So again, I want to understand why the options on Expedia are so underpriced, because remember, when we scan for Expedia, we look for very cheap options, okay? And I want to see why. Why is that? Okay, and notice how earnings reports are very far away. They happen on the 7th of February. There is nothing in front of us until April. Okay, so that would be great. Okay, and Expedia is falling. We got UFOs here. Actually, it's looking very good with 2 UFOs overlapping each other. If Expedia was to arrive to this price level at 119 something, it is really looking nice for a nice trade. Okay, but anyway, we are far from that. So I'll take a look at gold, the gold ETF, and see if gold is a little narrower, a little closer. Well, again, it's very nice setup with gold as well. By the way, notice how gold shows a much lesser probability. This is the effect of the fact that gold trades 24 hours, and this is an ETF. So you have the price decay effect of the ETFs, okay, which is distorting the UFOs. It's like those UFOs is kind of like, instead of being horizontal, those UFOs should be in an angle, okay, should be in an angle because of the price decay, okay, and unfortunately we cannot have that on the screen. Okay, so we need to be a little careful with that. When I trade the gold ETF, the way I like to do it the best is to use the chart of gold futures, but execute the gold ETF, but use the chart of gold futures for my UFOs, okay, because gold futures does not decay. So what about Southern Airlines? Okay, well, nice uptrend, etc., but we are far from the UFOs. What about Procter & Gamble? Okay, still pointing up as well. I'm just trying to pick the trade that is nearest to entry, which for now looks like Expedia. And that one looks pretty good as well, UPS, if this market comes back to the UFO. And what else we have? And this one too. Okay, so I'm gonna go with Expedia, because Expedia really is the best setup. Okay, we are $7 to $8 away from entry. If you look at how many dollars Expedia dropped the prior 2 days from here, sorry, I was not doing this right. So from here to here, Expedia had a drop of $6.06 per day. So if Expedia drops at the same pace, you may get there either today or tomorrow. Okay, so even though it looks a little far, again, it's not that far. Okay, so it's not that far, and really we have no UFOs in here to stop Expedia falling to this UFO. Okay, so what is it that you will want to do if Expedia gets to this UFO? Okay, well, if you were to be a stock trader, you will probably set an entry, okay, at 119 something. Okay, let me see what is the something. So the top of the UFO is actually 120.86. Okay, 120.86. That's the top of the UFO. And then you would have a protective stop. Okay, you would have a protective stop at 115.37 below. So let's call it 115. Okay. Something like that. Okay, so that would be your plan, and of course we also need a target. Okay, so you would probably set up a target. So final target at 137 more or less. Let me take a look at this red UFO. This is 135.34. Okay, 135.34. So 135.34. Let's make it 30. Okay, so that would be your plan. Okay, you would be happy to go long Expedia at 120.86 with a protective stop at 115 with a target at 135.30. This is what you would do, and that would be the plan if you were to be a stock trader. But remember, on Sunday we talked about this concept of using calls. Okay, using calls instead of shares of stock. Okay, so if you wanted to apply this new concept that some of you learned for the first time on Sunday, for some of you this is not new, but some of you it is. So what you will want to buy is a call, and the question is, which call should you buy, right? And the answer is, you need to look at the option chain. So we will look at the option chain. This is the option chain for Expedia. Okay. And here are a few instructions. Again, we need to spend time. In the sharpening sessions to go deeper and deeper. But as I said, even when we do trading, it's a little bit sharpening too. I need to give you some information, right? So first of all, we'll need to talk about which expiration date. Okay, and second, we need to talk about which strike. Okay. So the strike, you want it to be the same the institutions, let me shorten the word, the banks use. Okay, the same the banks use. And the expiration, you want it to be the one where earnings will take place. Okay, why is that? Well, because when earnings takes place, what's going to happen is that those options will have the tendency to gain value because people will expect that something's going to happen. Okay, so remember, we said earnings for Expedia will be on April 25. So which expiration date would I want to use? Well, we want to use April 18. I mean, I know idea 18 is before 25. But also if I go to 21 of June, I'm really adding 3 extra months, and I'm not saying this is wrong. Actually, 2 extra months. I'm not saying this is wrong, but you are increasing the cost of the option, and if you increase the cost of the option, you are also increasing the risk. So in this case, I'm going to use April 19 because this is where the earnings reports take place. And this will offset a little bit of the problem of the time decay. When you buy options, they decay as time passes. So if I buy a call, okay, buy call when Expedia reaches 120.86, okay, if I buy this, and then for Expedia to reach the entry, it's going to take, I don't know, whatever, 20 days, well, then you are suffering 20 days of time decay. Okay, you are suffering 20 days of time decay, and that's not good. Okay, so how do you offset this problem? You cannot stop time from passing. But what is it something you can do? Well, by picking the expiration date where earnings are, if any added value to the option happens, because remember the option, we filter it to be the cheapest options in the market. So if they are the cheapest, normally what would happen is that the options will gain some value. Why? Because they are the cheapest. They are way too cheap, right? So that added value because of the option regaining value after going too cheap will help to offset theta, and the fact that we are picking April, which is where the expiration date, where the earnings are scheduled to be, all of these increases or creates a scenario where you will likely suffer less um, pain because of the time decay effect of the options eroding some of their value. Is that making sense? So what you would do is you would buy. Remember, that's my comment when it comes to expiration. And when it comes to the strike, you're gonna use the same that the banks use. Well, the banks are buying Expedia anywhere between 120.86 to 115. Okay, so what are you gonna do? Well, we're gonna buy the 120. Okay, we'll buy the 120. Why? Because if you buy the 120 call, if you remember the lesson from Sunday, you are acquiring the right to buy Expedia at the same price at which the banks buy Expedia. If you were to do that, it's obviously a smart move. And if you were to do that, just out of curiosity, the current value for this option is 9.6. Okay, we can see that 9.5 if you go for the mid. But what if? So let's look at the 120, the one in the middle here. What if you wait, which this is what you should do, by the way, right? What if you wait for Expedia to trade at 120.86? Well, at 120.86, the expected value of this option is 560. That would be the expected value of that call. Okay. Expected to be around $560 per call, okay, per contract. So what will you do? Well, if you're happy with this plan, you just go for it. And now you can deal with this plan in two different ways. Way number one, have a protective stop to sell the call if Expedia goes below the green UFO. Or if you are okay with risking 560, just leave it alone. No need to use stops, because even if Expedia goes below your UFOs, which is unlikely, and on top of that you got two overlapping UFOs, which is pretty powerful as a setup. Well, on top of that, you would end up in a situation where Expedia may go down a little bit and then come back up, and now Expedia comes back somewhere in here, and now you can close that call for a break even, and therefore you never suffer the loss. That's the beauty of options as well, that you may want to use or you may not need to use stops. And choice number three, for the very advanced, maybe you buy a few calls when it comes to the first UFO, and if it goes to the second UFO, you can buy a few more calls. Okay, you can also do that. But anyway, here's your timing, and here's the plan. I forgot the expiration. That's the expiration. Okay, so if you want to take a screenshot, this is your time, and this is a trade that you could put in the system to buy the 120 call if Expedia reaches 120.86. Okay, you can also place an alert on TradeStation, so you are alerted when that happens, or you can use any any service with a TradeStation app on your phone, place an alert, whatever, so you are alerted when that happens. Or if you know how to use conditional orders, okay, we'll need to talk about orders as well. So you can also use activation rules on TradeStation to have TradeStation buy the call if Expedia reaches 186. Okay, good. So I have exceeded by 8 minutes the ending time of the session, but I'll keep going for a little more, guys, because I committed to 2 answers. How is it going so far, my friends? How is it going so far, my friends? So I'm going to take Mario's question first. Okay, I want to show your question on the stream. So Mario is. Oh, I'm so sorry, Mark. I'm just realizing you have typed a few questions here, and I totally missed it. Let me see. Mark said less than I would if I was stopped out earlier, but not a lot less given the short time I was in it. Oh. Oh, got it. I understand. That was referring to the CRM trade. Got it. Mark said as well, bear call on TOS has the premium 139. You're looking at 180, 185. That one makes a lot of sense too, Mark. I see what you're thinking. So you are talking about Baidu, isn't it? Mario, I'm coming to you. I'm coming to you 1 second. So Mark is talking about Baidu, 15-minute time frame, and those 5 minutes UFOs are pushing the price down. But what you're saying is forget about it. Let's go for the 180, okay? And Mark is basically talking about you can do a spread 180, 185, and collect $1.39 of premium for that. Okay, so I didn't have the time to analyze it, and therefore I cannot, let's call it, validate the trade. But I am sharing it with a group of traders here. Mark, thanks for your analysis. Apologies for not having seen your text before. Yeah, TOS also will not accept more than 4 strikes in a custom trade. Yeah. Most platforms are like that. Yeah, got it. Okay, thanks for that, Mark. And again, a shame I didn't see your comment earlier. We could have analyzed that, okay? But anyway, Microsoft. So looking at Microsoft, we're back to Mario now. So Mario says, my pleasure, Jose. I don't know if this question is out of scope. I was considering to set up a bear put spread on Microsoft daily time frame. So let's move to daily time frame. And you were looking at the UFO 109, 45, 110, that UFO. Very good. Very good. Okay, very good. Well, to be honest, what is the spread you were planning to do? Oh, you didn't give me the strikes. Okay, good. So you basically plan the spread because of the UFO, but you didn't provide the strikes for the bear put spread. Well, here's what I will say about this trade. If I was to activate if I was to make it false, I should say, if I was to change to false, hide hit UFOs, you can see that there is a little residual buying there. Okay, there is a little bit of residual buying here too, and this is kind of like a mess area. Okay, it's kind of a mess area, and the reason why I'm pointing at this, okay, so let me have a line at the beginning of this mess area, and let me have a line where this green UFO is, okay? Even though those UFOs are low probability, we also need to think in terms of what is likely or what is unlikely on a move, right? Because when you look at this chart, the first thing that comes to my mind is, oh my God, Mario, if you're right, you're gonna raise this tiny bit, okay, to make this huge amount, right? That's the next UFO. You know what? It's true. That's what the chart is showing us. But at the same time, we just saw as well huge amount of mess and huge amount of mess. So in other words, what I'm trying to say is that every time you see this huge amount of room for the market to move, you always need to raise the skeptical flag, right? And immediately ask yourself as a trader, okay, what could be there to stop the price from traveling so far? Because this is very far, okay? So you are talking about having Microsoft move from 109.45 to 82.54. We're talking about a $26 move on a $109.45 stock. We're talking about having Microsoft drop by 25%. Is that possible? Yes. Is it likely to happen that quickly in one shot? Well, how often do you see stocks drop 25% in one shot, right? I mean, yes, it could be, if it's a penny stock, if it's a company that, just got a merger, earnings report that were a complete mess, stuff like that. But we're talking about Microsoft, so I would say it's probably a quite stable company. So you always need to raise that skeptical flag, okay? Skeptical um, a skeptical flag that we traders need to always have ready to raise. Okay, we always need to look at, why is this plan looking too good to be true. Okay, so we always need to do that. So if you were to this trade, I would suggest, okay, I would certainly suggest taking partial profits here. Okay, around 103 in the short, and also partial profits here, and or probably even final target here, because if you do a bear put spread, okay, to do a bear put spread, and we haven't covered any of these yet in the option sharpening, and we will, but I'll say it super quick. So what you would do is that you would buy a put at the strike, okay, let's call it 110, okay, and then what you would do is you would sell a put, let's call it 95, okay, and what's going to happen is that the only way to have this work is that you're going to have to use a pretty lengthy expiration date, because the 95 put, I don't think, okay, again, you will want to do the same thing I did earlier. So you will want to look at briefing.com, we look at Microsoft. You will look at Microsoft. Earnings is on April 25. Funnily enough, it's same as before. So you would go for April, that's 64 days. And when you look at the 95 puts, they pay you 66 cents compared to the 110, which is 204. It's a very little amount of premium. Is that making sense? So if you were to shoot for the 82s, okay, if you were to shoot for the 82s, now you will need to sell the 82 put, okay, or 80 or 82.5 or whatever is available. Let's see, 80. And the 80 put, look at that, it pays you 7. So, to shoot for that bottom target, which is so far away, basically, you would not do the spread. You would just go ahead and buy the 110 put naked, and that's it. If you're going to do the bear put spread, okay, I would suggest that you do 110.95, the right expiration date to be used, okay, would be April 18, 2008. Okay, and this certainly could be a valid trade. I would like to double check a few Greeks and so on to make sure this trade is valid, which is looking okay. But unfortunately, I cannot do it because of, I'm really extending this session too far. I want to be respectful of your time, okay? But hopefully, Mario, this was the answer that you wanted, okay? And also, Chuck, you had a question earlier related to the euro in the 4-hour time frame and 1 hour time frame. So, Chuck, if you are there, please give me a little more detail about your question, because I am now loading the euro in a 240-minute time frame and 60-minute time frame. So please tell us more about the UFO you were looking for, and your question about a UFO that was not present in the 60 but was available on the 240. I would like to understand better your question so we can talk about it. Okay, so I'm just waiting for Chuck to phrase his question here. Yes, Chuck is here. So Chuck is typing. So we're waiting for you, Chuck. No rush. I'm not saying this to give you any sort of pressure, so no need to rush. But just know that we are waiting for your question, in the sense that earlier you mentioned something about a UFO in the 60 and the 4-hour time frame, and this would be the time for me to understand better exactly what was the problem. Okay. So the euro shows a UFO at 4 hours. So here we go. So we are talking about 240-minute time frame. Here we go. 240-minute time frame is right here. Are you talking about the green one or the red one? Okay. So Chuck said, let me bring your question to the room. shouldn't it also show one in the same area in your 1 hour zone? Okay, could you please confirm to me if you're talking about the green below, where price is now? The green UFO, got it, perfect. So basically, please correct me if I'm wrong, but I understand that you're talking about this UFO here. That's the one you're talking about, okay? And you are basically saying that, hey, between these price points, the algo is identifying unfilled orders. And now let's move to the 60 to see what we see. Yes, perfect. So I'm with you. I'm following you. Let me take a look at the 60. So you are now asking, why is it that nothing shows here at this level? Yeah, very good question. Good. So again, it's all about as always, it's all about probabilities. Okay. And remember, the app is doing multiple things behind the scenes. So think about. I'm gonna go extreme. Think about a monthly time frame, right? If you look at a monthly time frame, you have UFOs, and I mean every time frame got UFOs. But if you look at the UFOs, from this last UFO that was created to current price, we are talking about 961 pip move. So it's kind of like 1,000 pip move that has happened from the last UFO. Now, if you look at this in a 240-minute time frame, and you look at the last move that took place from the 4-hour UFO, from here to here, okay? So we are talking about 119, let's call it 100 pip move. So the smaller the time frame, the smaller the moves out of the UFOs. And why is that? Well, because typically the imbalance available between the amount of buy orders and the amount of sell orders in that price region is lesser when a time frame is smaller, and is more when the time frame is greater. Okay, and you see that the evidence of what I just said is when you see the size of the moves that happen out of those zones. Does that make sense? So in the 4-hour time frame, given the setup that we have in front of us, given certain things that were identified, unfortunately, I would love it if TradeStation had, let me see what date that is, 11. Yeah, maybe if I go back to 11, it would be easier understood. So when you look at, okay, to 11, let me see if I get what I want to show you. Yes, so if you look at 211, we have those red UFOs here, right? Which this was implying a big pile of sell on field orders. But next thing you know, you look at what happened the next day. Right? And notice how the green UFO that formed, that pile of order has been significant enough to be able to take out all the sell on field orders that were in the market and that the algo had identified. Okay? The algo had identified. It was not a joke, it was there. But some new bank, some new institution showed up with a buying power which was relevant in this time frame, where in this particular time frame you have been proven the power of this UFO. Now, if you were to look at the 60-minute time frame at that time, okay, if you were to look at the 60-minute time frame at that time, there were some on-field orders. So good eye, Chuck. Very good comment as well, Mario. Okay, good eye. But what happens in them? If I draw my lines in here, okay, where you have all those on-field orders that you find in the 60-minute time frame that you also had in the 4-hour time frame, okay. Notice how there is a little bit of an overlap, okay. So the algo is kind of picking up the same areas, even though of course different institutions don't buy in one shot everything at one price. They add multiple pile of orders and little pockets of orders at different prices to be able to fill their big positions. So that's why you have an overlap and it's not lining up exactly the same. But now if you fast forward to today, Okay, let me before I fast forward to today, let me add a vertical line because that was February 12. So if this is February 12, okay? If I fast forward to today, which is February 13, today, February 13, well, notice what has happened. The market went deep enough to consume all the unfilled orders that were available in the 60-minute time frame. Okay, so again, as we have seen before, I'm pretty positive that if you were to, instead of hide hidden UFOs, you were to make it false, here's your UFO from the 60-minute time frame lining up with the 4. But the problem is that notice how it went quite deep. Actually, remember, the darker circle in the UFOs represent where the algo understands there is the greatest concentration of orders. So notice how it went all the way to the extreme of this greatest concentration of orders. Therefore, from a probability standpoint, the majority of orders that you could see in the 60-minute time frame are now gone. So you are left, if I go back to here, you are left, if I go back to the 4-hour time frame, you are basically left with this residual, whatever amount of unfilled orders that are left from here to the bottom part of the 4-hour UFO. And by the way, notice how the UFO now is light color instead of dark color. Okay, so your question is fantastic and super, super advanced, Chuck, which demonstrates and proves to all of us that it's not the first time you're looking at a chart. You've been looking at this for a long time, and your eyes are really identifying a lot of the story happening behind the scenes. The good news is that with the AutoUFOs, it's kind of, this is done automatically, and sometimes, a human eye, we may get to see something or we may get to miss it. It's how many times you have taken a picture of a group of your friends and someone closed the eyes, but you never realized they closed the eyes until when you are back home and you look at the picture, it's like, oh my God, John was closing the eyes. Is that making sense? So there are many things that sometimes escape to the human eye, and hopefully doesn't to the AutoUFOs. Okay, so that's a little bit of the beauty of the app. It really stacks odds in your favor in multiple ways. Okay, but again, to trade, apart from the app and being professional and being disciplined and having targets and stops and manage the risk and all of this, there is also something that we need. And Chuck, thank you so much for your question. We also need something called confidence. You cannot be a good trader if you're not confident, and you cannot be a good trader, you cannot be confident unless you practice and you gain some experience. Experience develops the confidence, right? Experience tells you what to do, confidence allows you to do it. And if you're a person who is a little bit of a perfectionist, which I am, and I am guessing, Chuck, you are a little perfectionist as well, which is good in the sense of being detail-oriented, there's no way you can build confidence unless you ask these questions. So very well done asking these questions. And everybody, whenever you have questions, please don't keep them for yourself, okay? Just ask, because this clarification hopefully not only helps you to use the AutoUFOs app more efficiently, but also to trade with more confidence, which in the end is key to be successful. So guys, pleasure. I went 30 minutes beyond the time. What can I say? I love this. So hopefully you had fun and you have learned. Not too happy about the non-directional trades today because we didn't get much. But good trade with Expedia, guys. Good trade with Expedia. It's looking good, to be honest. The trade with Expedia, and also we talked a little bit about options and other things. So hopefully it was a good day for you. And we will see you soon. So soon means, to be precise, soon means on the 19th. February 19, we'll be doing short term. That is next Tuesday at 9 a.m. US Eastern Time. Remember, we use US Eastern Time as a reference because this is where Wall Street is the biggest market in the world, and but of course, if you live in a different time zones, do the math. So make sure you are on time. Okay. Fantastic, guys. Enjoy the remaining part of the week. Okay. Kill it in the market, guys, and send us questions if you have any about the use of the UFOs or anything you may need. Okay. By the way, we are a little delayed with email answers. Okay. We've got many questions in recent times, and we'll be catching up. Okay. So if you are one of the users of the app who sent an email and you didn't have the response, believe me, we have your question. You'll get the response very, very soon. Take care, my friends. See you soon. Bye-bye.